Hey, good morning. Happy Friday. I wish today's Friday. Look at my account down there. I wish it's today's Friday so I can close a book and go home. Happy Friday. No, happy Tuesday. Crazy day. I wasn't disciplined and anyway, I wish today's is Friday. Anyway, where are we? Okay, let that sink in a little bit. Anyway, my strategy is still the same. Buy at the support. Was it buy at support, sell at sell at resistance? Anyway, my strategy is not buy high, sell low. Crazy day. Yesterday and today, I don't know what's going on with me for the last couple of days, man. Anyway, but I promise not to buy high, sell low today. It's so crazy. Anyway, anyway, I will not trade my any of my funded accounts since I'm not stable yet. Let's focus for today. Yep. Good morning, everyone. Yep. I'm trading with my balance account today. Not going anywhere. Wonder how when Papa Pow's speaking today. So let's see. It hit the VWAP right now. Hey, good morning, Zach. Happy Friday. Like I said earlier, I don't know if you guys saw, but I wish today's Friday so I can close my book and go home. Anyway, how's it going, Zach? Thank you so much for your support, Zach. I need it. Thank you so much. Same to you. Send the good energy to all of us here. Good luck to all of us. Look at my account down there. I still have the account, but my funded account, not great. But anyway, so I'm trading with my Charles account today. Anyway, no big deal, right? You have to know when to stop. But I was laughing and go, keep buy high, sell low. What's going on today? The last week or so. Crazy. What can we do? Just laugh. Anyway. Wow, jumped really quickly. 25 points. Look at that candle right there. Wow, it hit that VWAP. Bounce back up again. The high today is 36. Trading at range right now. 36 and 79 down there. 40, 60 points. Hey, what's up, Gino? What's happening? What is going on? After it took me off and then, oh man, I'm house early. 7 point is not enough. Look at that. I'm watching here. Now EMA in the 50. Oh, okay, did not take that tray. See the resistance right here at 218. I got in kind of early. Missed that tray. So basically, short at the resistance, cover at the support. Ah. Not that good. 52.9. Oh, you hold it overnight? Man, we'll bounce back. Remember? I'll be back. I'll be back. Anyway. Da, 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 da. Da, 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 da. We're trying to be patient here. You guys see all the resistance support level that I on here. So you're $1,000 away from passing that account, right? You're on the 50 account, 50K account. Man, look at that, 52,982. What, you about $18 away from passing that account? Man, I'm sorry to hear that, honestly, man. Whoa, really? So close. Are you going or not? Let go. Let go. Oh, power speaking. Oh, come on. I better get out. I better get ready to get out. Power speaking. Oh. Powell speaking. I better get out. Okay, I'm out. $60 on that. Powell speaking. Oh, no, Chino. Crazy how like $18 to pass. It happened to me before too. So, welcome to the club. I've been there. The Powell speaking. Let me see if we can CNBC or something to see what Powell's saying. Okay, I better stay away for a little bit because Powell's speaking right now. We don't know what he said. Da, 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 da. Yep. Yeah, I'm not trading right now. Let's see if Hey, Ty. Thank you, Ty. I appreciate that. But you know, it was raining over the weekend, and I couldn't go anywhere. I was going hiking, and it was raining so hard, and I go, okay, I better stay in. Yeah, but thank you for that, Ty. Appreciate that, Ty. Welcome back. Thank you for stopping by, Ty. But yeah, I was planning and planning, so yeah, I have to go. And it had to rain on the weekend. And for the last couple of days, the weather's so nice. I don't know what's going on, man. I want to get out of the house. And it had to rain when I planned to go hiking. I don't know, man. But anyway, how you doing, Ty? How you been doing? Been hiking, fishing? It's okay, just taking my time here. Yeah, I know, Ty. Awesome. Yeah, I'm glad that you enjoyed outdoor. Kind of peaceful how to be with the nature, decompress. Man, awesome, Ty. I know, but this weekend, man, for sure. Man, I better check the weather before I say something. Yeah. Da, 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 da. It's very tight right now. Yeah, thank you, Ty. Thank you for that, Gino. I'm sitting on my hands, man. I got many things going on with speakers here and speakers here, and I don't know where to put another headphone for the news. So many things going on in my head right now. So yeah, keep me updated, man. Keep all of us updated in terms of the news. Okay, listen to Papa Pow right now. CNBC. I don't think the copyright, right? Let me see if I can put the news through.
The different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates.
Right now.
And that has restrained household spending.
Can you hear them speaking?
In Canada.
I just turn that on.
In each of our countries, I do want to underline that we gear our policy decisions to our domestic monetary policy mandates.
I was wondering if you guys
and in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So, simply put, we don't have to do what the Fed does. We can do what Canada needs.
Back down.
I do think, though, we're looking at the same things.
Okay.
And
You guys want to hear that? I can leave it on.
I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to
we all
reduce
can
interest
watch
rates.
it.
Last week in Canada, we held our policy rate at 5%, where it's been since last summer.
Okay, got it.
We did stress that we are encouraged by the recent progress we've seen on
Let me turn
inflation,
off
and we
the
want to see
music
it
here.
sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did
Is it too
tick
loud,
down
or is it
again,
okay,
and that
or?
does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years, because the more we understand what we have in common and our differences, the better we can learn from each other's experience. And let me just close on a few words on just how integrated the Canadian-U.S. economy is. And Randy, you highlighted
he's not
some
saying
of
anything,
the key facts. I would totally share your perspective. I think the economic relationship really is the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States. And as you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods
115
head north to Canada. If you look at foreign direct investment, there is a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States.
You pass your account, or you made money on your
far the largest share of our
account.
FDI. That was roughly $43 billion. In the same
year,
year,
you guys doing pretty good. Awesome, congrats.
Of US FDI came to Canada. So it's a pretty balanced relationship. And
Other
I think
than that, I'm okay.
these numbers
I'm good.
underline is just how close that
it could be better, but
is
I'm good.
and how
I'm happy.
it works in both directions. And the final thing I'll say is, when you look forward, we face many of the same structural challenges. Our labor forces are aging.
It's hard, but
there's going to be a
we
big
can
challenge
do it.
with new technology, training.
We all can do this.
Making sure we have the skilled workers our economies needs. Climate change is affecting both our economies. We're both grappling with shifting trade and investment patterns globally.
Believe it or not, John been with me for so long. I remember John follow me on X.
Internationally are increasing global uncertainty.
Congrats, John.
And for all these reasons, I am very glad we're having this discussion. We do have much in common.
I appreciate
Randy,
it, John.
as you underlined, when we work together, we can get a lot more done. Thank you.
Well, thanks. That's a great place to start. Chairman Powell, really interested in hearing your perspective.
Now he's speaking?
Another place to start is to say,
Powell's speaking right now?
Jay and call Tiff.
Okay, I know I do it behind the scenes. I'll do it in front of the scenes, too.
Great. So let me start by
he hasn't
thanking
opened his
Randy and
mouth,
Bill
and
Xavi
it dropped 30 points.
for this. It's great to be here today. I want to echo what Randy said
going
about
on?
the mutually beneficial, respectful, great relationship we have with Canada.
You guys see that?
Economically, culturally.
He hasn't opened his mouth.
I'd also like to echo,
That's great.
I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves right now. So as I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. You know, we took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected
right
to
now I'm
achieve
staying
that
away.
confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Well, thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together, I know that often you see each other at G7, at G20 meetings, and I think it would be quite interesting for the audience to understand, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, maybe I could ask you, Jay, to give a perspective on how that happens from your vantage point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I attend 2 G7 meetings per year for ministers, that's finance ministers, and central bank governors. We don't attend the leaders meeting, but we attend, in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're and that's only central bankers, no finance ministries. So it's all central banking stuff. And, it's economics, it's financial regulation, all those things. We also come here to Washington, or every third year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question. Essentially, the central bankers, are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with Canada. Those discussions are especially fruitful and important, and I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that.
Okay, focus.
Tiff did mention the similarities and differences. I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home, and there usually is. We're there for 4 or 5 nights, and there are usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation, who are really good and very funny and a lot of fun together. So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first monetary policy, first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly. I think it's every 4 years.
Look like we have to wait.
We really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
And Tiff, similar perspective from Canada?
Yes. I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central banking community, it's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other. So there is a considerable openness. And, as Jay outlined, I think there's a few different functions. Yes, obviously, if you're in Canada, we have our own group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada. But, the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting. It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately, those are things most people don't have to worry about. They are critically important for the implementation of monetary policy and that sort of plumbing working of the financial system. And being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us. And money flows across borders. So, we have to do that together or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously, we recognize that most of your work is focused on the domestic markets. But in times of crisis, there's real challenge, as you mentioned, in the COVID period, the global financial crisis, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable, the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system is resilient? So, again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, You know, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world. And you have to do that very quickly. And we, of course, can move quickly and effectively on the domestic front. But the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, you know your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language, so there's a lot of communication. The level of communication is pretty high anyway, but during crises, it goes very high. I'm constantly talking to other central bankers around the world, and also political leaders in our government, and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that
I know. I tried to take a couple of trades, and so one is broke even, and one knocked me out for $60. I really
one thing to point out is
to hit the home run
less about
somewhere,
coordination than it is about talking and understanding for one reason, or at least it was during the pandemic, and that was because almost every country's interest rates were very close to zero when the pandemic hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any
look
other
at that, man, it's moved like crazy.
Nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do
so fast.
Help at that point. In terms of what you asked about learning,
we have to be superhuman to
I think
trade
that
right
the
now.
pandemic's going to teach a whole lot of lessons over time. I still
Superhuman
think
to trade.
it's too early to say what they are with confidence, and I'll point out, look, the pandemic has surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd asked for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think. But we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring. And I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First, though, I will just underline, when a crisis hits, you're faced with a situation. You have to make decisions, and you have
we can go long
very limited information.
And pass our account today.
The other reality is you have a pretty narrow window to act to be really effective.
I don't know, man.
And for both those reasons,
right now.
being able to speak directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they
man.
What do they see as the options? It is hugely important in a crisis. And that it's a little more, though, than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there. But certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It restarted, reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates rapidly, we all helped each other. I mean, it helped reduce global inflation in goods, which was really the first part of the inflation surge, and it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So, for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3 o'clock in the morning in Canada, which was a little bit of a technical challenge. But most of the time, it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar tools, and we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-U.S. perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that that Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective into how important that is for your deliberations, and how that factors into decision making, the U.S. approach?
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economies are highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiply, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States.
Don't really want to make that trade, but
there are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policies do differ. Our cycles are often quite similar, and certainly through COVID we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where, particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is the case of
look at that,
Fed is using our tools to achieve maximum employment and
you
price
see it
stability
there.
for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable. Given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods. So if you remember, and you I'm sure will, there were unexpected widespread shortages and supply chain failures on a scale not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that we're seeing those two things working together to bring that end about. And you saw that, I think, in 2023, which was really, in a large way, a supply-side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021, and in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we're talking about the similarities and the similar approaches to dealing with inflation and the positive results. But we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand.
I was looking at this right here.
In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada. And even if your mortgage hasn't renewed, it's renewing in the next couple of years probably. So you're thinking ahead, thinking, when it renews, I'm going to have to be paying a lot more on my mortgage every month, so maybe I should be saving more money now. So we're seeing that effect. We've had weaker consumption growth. And certainly that's been somewhat masked by the fact we've had very rapid population growth. But if you look on a per capita basis, you can see household spending per capita, per family has actually gone down, even though growth has not been negative overall. I think moving forward, we are actually seeing growth starting to pick up. You guys notice that?
When you're in a trade, give you $30, like a point and a half. But when you're not, it pop 20 points.
Overall, we think that strength
the market maker knows where my trade is, man. But that's not fair, though. I only trade one contract.
That's partly where we expect to see. We're starting to see some
is that crazy?
Consumption.
When you're in, they give you 1 point
it is
profit.
The resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar. But you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. Our last few inflation readings have been reasonably good.
At least I try.
Even though total still close to 3.
Put on a good show.
Been, the last few times ticking down. And if you look at the more timely 3 months measures of core inflation, there is some downward momentum in underlying inflation. And I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship, and I also really appreciate all of the comments on the importance of trade.
I want to take the short here, but
trade between our two countries.
My left brain
and foreign direct investment. And so,
hey man.
While you're not trade policy experts, and I get that your organizations, that's not the focus.
Let's go.
I really appreciate you giving us a little
what can I do?
Of, how do you think about
left brain say go,
in
the right brain go. No. Hold
how
on.
that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply. So maybe I could ask you, Jay, to give us a reflection you might have on that and deliberations.
Kind of tough sometimes as a trader.
I guess I need
you
to
sit
start
on your
by saying
hands.
we don't do trade policy. We don't really
want to make a
comment on trade policy other than to say
Look at that movement.
It's clear that we have a mutually
want
beneficial,
to make the trade.
large, substantial,
your left
ongoing,
brain go,
healthy
the right brain
trade
go,
relationship
let's
with Canada that we
go.
very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough
2 more
of it.
hours to
and
go.
that is Canadian comedians and comic actors. I started to count the number of really great, funny people.
Since
I
when the
limited myself to 10. So
Papa
Jim Carrey,
make
Martin
jokes?
Short, John Candy, Mike Myers,
when
Norm
did he-
Macdonald, Rick Moranis, Dan
he
Aykroyd,
does,
Catherine O'Hara, and Andrea Martin. And I could go on. So something's going on up there. Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess.
Is this the
Tiff,
long
all
that
jokes aside,
John talked about?
Any comments from your perspective?
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And that's really, it comes down to geography in some sense. I mean, that's fundamental to the interties we have across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians, just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things, in Canada, we buy a lot of your consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce. Similarly, energy. We're both energy producers. It often makes more sense to trade the energy north-south than to ship it across the country. So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow. Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services. Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on USMCA. Obviously, for both countries, the market access is key. The other thing I would underline, though, it's also the certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments, to deploy their risk capital, to commit to the future. And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago and reflected on what we were thinking back then might be the trajectory of our economies, we probably wouldn't have had an expectation that we would have been where we are today. We would have expected more challenges than we've faced.
What the fuck was that?
And I think we need to recognize that the stewardship that the Federal Reserve in the United States and the Bank of Canada and Canada have been responsible for has made an enormous difference in citizens' lives.
Okay,
we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that important work, and I want to thank both of you for all that you're doing for all of us in making that the reality. And also I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple of years, the U.S.-Mexico-Canadian trade agreement will be looked at again, and we want to reinforce the importance of working together, the importance of collaboration and cooperation, and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important for people. So thank you very much, and I know it's a busy week for you, so we appreciate also taking the time during this busy week. So thank you.
Okay, we're done. We're done.
From the Canada Institute, I'm going to ask Xavi Delgado to close off our session today.
Thank you, Bill. That concludes today's program, everybody. Thank you all, everybody in the room and online for joining us.
Done. Where's my music? Okay, we're back to normal now. Don't mind me, man. Just let go. Let go to the moon. Go. You do you. Come on, let go. Let go, let go, let go. Here we go. I'm just right behind you, my friend. I'm right behind you, but just go. You go. I'm just right behind you, my friend. Let go. Don't be shy. Let go. Don't stop me out. Oh, whoa, whoa, whoa. Hey, slow down. There's no rush, my friend. Let go. You do you. Let go. Go, 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 go. Let go. Oh, no, no. $760 on that trade. Yeah. Only one contract. Awesome. Oh, I caught that. I caught that big fish. Yeah. Oh, yeah. Let the fun begin. Thank you, Tino. Appreciate your support, my friend. Yeah, that was that trade I with 7-point stop loss. So risking $140 to make $760. It's not too bad. Even go higher, see. That's all right. Yeah, Chino. Even go higher too. Took me out at 60. Wow. Another 20 points. Wow, that's another $400, man. Look at 60, 70. It went all the way to 80. 20 points. Wait. Okay. What the? Line. Why can't I draw lines? Okay. Line. Okay, we go. Wow, look at this candle right here. We'll break that high too. Wow, the buyer stepped in, huh? Yeah, the 50 EMA down there, down here. This is 20 EMA. Yeah. I'm hot, man. Right here. 91, where my lines is. 18. Yeah, 91, right here. I got in right here, up here. I got in way late. I got in at 17. But you were talking about right here is 91. Yeah, right here. Look at these candles right here. It's already pushed where that VWAP and the 9 EMA. Yeah, you're right. Right here, down here, all the way to 90. 90, 91 right here. That's where the 9 EMA and the 50 EMA. And the VWAP here too, right here. Yep. But I got in way late than that, later than that. I got in at 9:17. But yeah, you was right here. 90. Yeah, I better keep an eye on that too, huh? That seemed to work. Yeah, I'll keep an eye on that, Gino. Keep an eye on that signal too. Yeah, I will. Thank you for pointing that out, Gino, for all of us. For a lot of us. Yeah. You was talking about this area right here. Look at from 85 to 38. We're looking at 55 points. 55 points with 1, 2, 3 minutes. Yeah, we have to read the candle correctly. Look at this here. See this candle right here? And look at this one right here. It says something to us. Right? The seller stepped in and said, nope, you cannot make any more higher than this. You cannot go any higher than this. You'll step in and then follow through. 50 points. Yeah, we have to focus in this business. Not to focus. And read the candle. Look at this. Look at that candle here. Yeah. Sometimes you get carried away, and then our brain is like we watching the candles so much, and we spend too much time on the computer, we cannot see it. But look at this candle right here. There's something here. Right here. Oh, that's 60 points. Oh, we're talking about 80 points from this candle here. 80 points. God damn, you passed your account. 80 points. That 1,600 for one contract. Man, better focus. Oh, jeez. 80 points. And okay, look at here. 90. We have to support at 90 right now. See if the 90s hold, the 90 and the VWAP here too. So came back to the support at 90 and the VWAP is at 88. See if those twos hold. See if we can look for long or broke through or breaks through the 90 and the 88, the VWAP. Okay, just hit the VWAP and bounce back up and see if break through the VWAP or not. Bounce back up again 2 times now. And here you're trying to go through the 50 EMA. Hey, 1 billion. Oh my beer. I did. But look at this right here. I did that. 160 bucks on that tray. I asked Chino to hold my beer. Go. Okay, I'll hold your beer. Let go. Yeah. Chino go. Yeah, man, you go ahead, man. I'll hold your beer for you. Go. And I go, okay, hold my beer. Now go. Anyway, how's it going, my friend? Wow. It broke that VWAP and the 90 too. I don't know, man. It just dropped 80 points and I don't want to short right now, man. I don't want to get trapped. Hey, man, anytime, Chino, you can ask me to hold your beer. I'll be happy to do that for you. That's what I'm here for. And hold your beer anytime, my friend. Hold my beer. I don't know. After this 80-point drop, man, I don't want to short, man. See if it's holding or not. Okay, it's trying to hold on to that VWAP. Yep, the orange, the yellow line. Right here's a VWAP. I don't know. I'm gonna take a long here. Wait. Seller still step in and push it down, trying to push it below that VWAP. See if the buyer step in and push it back up. Here we go. 70. Wow. Yeah, sometimes we just cannot tell. We have to trade the chart. Yeah, look at the chart and look at the candles. You know how negative the candle is, and trade with that. I just cannot say, oh yeah, it just dropped 80 points. You know, and not taking the short. So sometimes we have to do that. Wow, 500 points yesterday. Yeah. Oh yeah. From the high to the low. I know her. That was crazy. Yeah, look at that. We have to trade the chart, man. Once the VWAP broke, see the VWAP broke. Buyer step in, trying to push it back up again, and it broke the VWAP again. And we have to take the trade. We just cannot say, oh yeah, it was 80 points, you know, already. You know, if I shorted right there, I would have scored 50 points, another 50 points. Man. Yeah. No, I'm not. If I make a trade, you guys will see my trades right here. I did only trade this account right here, but I wasn't short. I wasn't long. I was criticizing myself, saying that I should take the short. Yeah. Yeah, I hope that I talk to myself and you guys can hear that, and we can see if we can incorporate that into our trading, right? Doesn't matter if it drop 80 points. If the candle and the chart tell you to short, just go ahead and short. Yeah. Yeah, that's what I'm trying to say. Yeah, I was talking about that. Yeah. Yeah, I was talking about short. Short at the... You see this candle right here? See how weak this is right here? And look at this here. It's trying to push it back up above the VWAP. The seller stepped in and said, nope. And then... and that's it. That 50 point. No, I will not remember that. No. No buy high, sell low, my friend. I learned that lesson. I'm looking for a long right now. Let's see if nope. I was watching if it break through 65. Doesn't look like it. Okay, now I wait for 45 to hold. But I like to buy low, sell high. But I have to watch it. Buy low, sell high, my friend. Again, I'm risking $140 here, but not yet. Oh man. I have to wait for the next candle to give me some kind of confirmations. Oh man, I wait too long. I wait too long. This is the VWAP too. The VWAP right there too. See if go through that VWAP. I'm not going to take the trade. The VWAP and the 9 EMA right there. And the 50 EMA right here too. I'm not going to take this trade, man. Even though this candle looked really nice. A lot of buy. The volume kind of okay too. But I have to wait for it to go through that VWAP. Okay, here we go. I really like this candle here. Okay, that's a 9 EMA and the VWAP. And the 50 EMA right there. Like I said, I'm watching for long. Take a long. Here we go. Like I said, I'm risking 7 points. Really like this. I'm still waiting for that 50 EMA right there. Oh yeah, I can show you my account. I have nothing to hide. I like I said, I trade with my show you my account. I trade with my funded account last night, and you can see that I'm $450 in the red. As for my balance account, I'm up $400. So, but I'm happy. I stopped trading that funded account because I promised myself to stop trading my fund account if I'm down $400. But I'm $67 more than my daily limit on my funded account. So yeah, that is my funded account. You see that PA right there, stand for performance account. It's a funded account. And as for the challenge account, is the Apex. You see the Apex? Yeah, that is the challenge account. So, yeah, you'll see what I, yeah. But on the bottom of the screen, showing my challenge account. Because I'm trading with the challenge account right now, so it's not showing my funded account. So, and that's that. Yeah. No, I try to be as honest as possible to you guys, but I try my very best to be honest as possible. You know, I to be honest with you, I don't like to show my red date and all, but why not? You know, trying to be honest with each other, perhaps we can learn from each other and profit together, right? Yeah. But yeah, thank you for that questions. Yeah. Okay, I'll go back. Oh, I'm glad I did not take that trade. You see that VWAP and the 50 EMA and the 9 EMA right there too. So trying to retest that load again at 46. Well, 45 is a low. Second time now. Third time now. bounce back from the 40, 45. Wow, 20 points. Moved so fast. 20 points. Okay. Retested that VWAP again. Here's an IEMA. That is an IEMA. And then the VWAP. And then the 50 EMA. Like I said, I am kind of patient. Be patient and trade my plan. Have to trade my A+ setup. Thank you, Chino. I'll see you tomorrow. Thank you for your support, my friend. Thank you so much, my friend. Hey, Jess. I think Jesse, huh? Jesse, right? Not Jess. Jesse. Hey, what's up, Jesse? How's it going? Welcome, my friend. Yeah, short. Buy high, sell low. Okay, Gino, I'll do that tonight. Thank you for reminding me. I'm good, Jesse. Thank you for asking. How are you? Okay, Gino. Get some sleep, my friend. What time is Puerto Rico right now? What time? Oh, it's only 2:30 p.m. Is that 2:30 p.m.? Oh, okay. Get some rest. Yeah, I took a few trades today, Jesse. Yeah. I trade with my funded account, and I'm red on that account, and I trade with my challenge account. I'm up $400, $395, $400 on that account. Yeah, kind of late with London Open, man. Look, London Open at 1 a.m. my time. Kind of super late, but I would, but kind of late, man. Yeah. Stop talking. Stop talking. Look at that. Look at that push. I was watching at this level here. See, you guys have to. We have to focus. Man, it pop on us. Look at that. I was looking at this level here. Remember I was talking about 45 support. Anyway, yeah, I have not traded with my Topstep account. I just focus on my Apex account for now. Yeah, but next week I'm going to come back and trade a Topstep account. Yeah. I'm Jeff. Where you are? Where are you? You know what? To be honest with you, okay. I'm honest with you guys here. I'm in North Korea. I'm in North Korea right now, so don't judge me. I'm in North Korea. Don't judge me. Don't tell them. They will not allow any Korean to trade futures. Yeah. They will come to my house and arrest me. You can't trade futures in North Korea. Yeah. You know, trading got into me, man. But yeah, I'm in North Korea. Kim Jong-un go, you can't trade in my country, especially futures. Trading. I've been trading. I'll show you my account. What the? Jesse, give me a break, man. I'm trading. I'm trying to have fun too, honestly. And then I would, like I said, I will not take any A+ setup. To take a trade. I'm kind of selective, but trying to have fun. I'm trying to put on a show for you guys. So stop giving me a hard time, my friend. But welcome, Jesse. Hope that you have fun and I put a smile on your face, right? But yeah, and this is my account right there. I've been trading. I have a whole bunch of the performance account, the funded account with Apex. See that right there? See that red account right there too? I'm not proud to show you guys that. But look, even go lower. See that 395? I really want you guys to see that. But stop giving me a hard time, my friend. Trying to have fun here. Anyway, trying to be nice to each other. Want to be nice to each other, man. Lift each other up, man. Yeah. But honestly, man, I'm trading in North Korea. I like it, Jesse. It's not perfect. Honestly, it's not perfect. And yeah, I receive payout from Apex. Yeah, and they pay. Honestly, they pay. So it's not a problem there. Yeah, I have no problem. Hey, thank you so much. I'm sorry. Let me see. Your name is Edmonds. Eminus, right? I'm sorry if I did not say your name correctly. With the Apex, as for the 50K account, right? When you hit 52.6, then no more trailing anymore. Yeah, 52.6. 52.6, yeah. No, 52.100. Yeah, 50. Oh, no, 52.6. Yeah. Or 52.100. I'm not sure. Yeah. No, Topstep is different. Topstep will reset at the end of the day in terms of trailing stop. But with Apex, they trail like right now. So if I make profit, I better log in right away. Yeah. Because if you're not, then you're in trouble. Let's say if you make $1,500, right? And you didn't lock in the profit, and then it came back and stop you out at a break even. Topstep will hold that against you, so they take $1,500 out of your trailing thing. So yeah. So Topstep reset at the end of the day, but Apex live. Thank you. Same. I hope you come back tomorrow and we hang out, have fun. Okay? We hang out. Thank you so much for stopping by, Jesse. Appreciate that. Thank you. I'll do. We'll do. Yeah. Yeah, I talk to Kim all the time. Kim Jong-un call me all the time. You know, even though he not allow us, all of us here in North Korea to trade, but he called me, Jeff, should I go long? Should I go short? You know, he called me for advice all the time. Yeah. But don't tell him that, okay? Yeah. But he called me all the time, honestly, man. But I go, okay. If you allow me to trade, not to give me a hard time, not to put me in prison, I'll give you advice all day long. Hold my beer. I'll give you advice. Yep. But yeah, I'll tell you that. I'll tell him that Jesse say hi. But if he come and arrest you, then that man, don't blame on me. I will tell him, Jesse James, say hi to you, Kim. Okay. We have fun, man. Okay, let me trade. Too much fun and I forgot to trade. But yeah, I hope you guys have fun. And then take good trade, A+ setup, make some money, pass some accounts. Man, that's what I wish for all of us to do well. Right? Whoa! What is that? You write Korean? Okay, what does that mean? Oh, no, I know how to read Korean. I know how to read that. I'll come back on that. Oh, wow. You are talented, you know? What does that mean? Oh, man. You know, okay, never mind. Yeah, I live in North Korea, but I do not speak Korean. Every time I go out to the Korean supermarket, North Korean, I go, me want this, me want that. And they understood what I was saying, so they took my money and hey, good night, Jesse. You have a good night, my friend. Wow, look at that movie. I thought you said that an hour ago, you know? Anyway, I'll see you tomorrow, my friend. Thank you so much for your support, Man, look at this move right here. 93, 90, 93 support. Oh man, this is what you're talking about, Chino. I wasn't focused, man. You see that right there, Chino? The VWAP, the 9 EMA, and the 50 EMA right here. It's just repeating again. Did not take that trade. Everything lines up. The 9, the VWAP, and the 50 right here. They're all crossed right here. Damn it. Focus. We're looking at 40 points. Okay. Yeah, I hope you guys was focused. This range right here. I wasn't focused. My fault. Right here, a 90. I was trying to short at that level, but here we go. man, it's kind of slow. I don't like that. Let go. Oh yeah, I don't like that. I think I'm gonna take a hit on this one. Oh, yeah, took a hit. $100 hit. Very tight right now. Knife 42, 43. Very tight. I'll do it one more time. Okay, let go. Let go. Man, that's not good. Super tight. Doesn't want to go. Nope. One way or the other already. Okay, my friend. Make up your mind. Up or down, just make up your mind already. Here we go. I'll try it again. Where that nine it? Okay. I should take a break. Take a break. I'll take a break. 5 minutes or so. It had to go and took me out. It had to do that. Take a step back. 5 minutes break. Unacceptable. Um, Hey, hello, what's up? How's it going, my friend? Welcome back. very tight right now. It's very tight, so I would not take any trade right now. Man, it's super tight. Super tight. Okay. Low and super tight, not going anywhere. Stop trading. Protect my account here. Yeah, just sometimes just take one step back. Yeah, it's not good. Yeah, very tight. It's not going anywhere for the last almost 30 minutes. Okay, but I guess we have to focus as it can take man, let me see. Yeah, I'm trading this range here for the last 20 minutes or so. And now it's breaking. Over 15, 19. Yeah. Now it's taking the now it's taking the dump. Ay. 20 points. Next one is 92. Tough is hard to trade like this, man. Let go. Just want to go. It's hard. is 9029. Yeah, I did right there. 908. 11. Yeah, it wasn't an A plus setup. It was an A plus setup. doesn't go. Risking 4 points on this trade. Come on. It had to go up and take me out for $40. $30. Okay. I think I'm done for today. Man, $30 on that trade. Anyway. And now EMA right here, 50. It has to go now. I'm risking $85 on this trade. It has to go now. Go. It has to go. Hate to get out now, but it has to go. Yep. Now it take off. Yeah, I bought at 50. can't trade when you scare. When you're scared, you cannot trade, and you cannot think logically. Yeah, I was scared. Not the way to trade. Get a candle right here. Yeah, I missed that. Yep, this is reality of trading, my friend. I was looking at this candle right here, and it just broke that 50 EMA too. It broke that 9 EMA, broke that too. And I was scared to take the trade. Nope, that's not the right way to trade. Now it hits that VWAP. Yep. Yeah, that's reality of trading. Trade with confidence. Never doubt yourself. You take the trade. You know, I have my stop loss in place too. I got 5-point stop loss in place too. And I'm afraid to take the trade, knowing that it will work out for me. I was looking at that. Here's the VWAP. Yep. Yeah. Confidence. Where is my confidence? Lost that. Stop doubting myself here. Here we go. The support at 75 here. Oh, confidence here. Twenty more minutes to go. Yep, stop doubting myself here. Trust my setup. Stop doubting myself. $45 on that trade. It had to go up and take me out. Not too bad. I'll take what I can get. The EMA is at 91. So we're looking at 10 points from here, 15 points from here. I don't know about shorting right now. So close to the VWAP. We see that we have the supported VWAP. Da, 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 da. $18 more minutes to go. Here the VWAP 91. Here's the VWAP hold. Here we test a 9 MA and then 50 MA, which is 920. 20 point from here. Very tight, honestly. 14 more minutes to go. Very tight. $99.90, $900. Up 20 points, down 30 points. Very difficult to trade. Up 20, down 20. Tough. But know that we have the support at 905, 900. It hit that 90 resistance level, which is where the 50 EMA also came back down. If we break through that, then we can do something. It hit that 20 and came back down again. See what break through. I will take a trade. We'd like to take a trade here. I'll take a trade. Ah. Come on. Let go. Oh, man. Okay. Yeah. Cannot trust this market. Is so tight. And when you get ready to give up, and then it's pop on you. Whenever you get ready to give up for the day, and then it just pop on you. I really like this trade here, long here, but yeah, I really like to go long here. Come on. Broke even on this trade. $15. I kind of force my trade right now. I revenge trading right now. So I have to be super patient here. Not going anywhere right now, but I have to watch it. Here we go. Oh, man. Hey, Felix. How are you, my friend? So tight. 6 more minutes to go. I think I'm done for the day. Yeah. Stop the bleeding. Yeah, it's not going anywhere here. And we have 6 more minutes to go. Trade in this range right here. 10 points. Ay. What is going on here? Five more minutes to go. One more trade. Come on. Let go. Come on. Okay, it's break-even trade now. It's a risk-free trade now. Come on. Come on. More. $100 on that trade. Hey. How come make money hard today? So hard to make money today. When they took you off and they resume. Go in your directions. You know what? Making money hard because I make it hard, right? I should have doing just a normal stop loss and hold on to the trade. Oh, my fault. Anyway, I'm okay. About 200 $225 in the red. Yep, I left 15 points on the table. That is $300. Is that working? So how you were trading, Jack? Zach, you trading at all today? Yeah, I think I'm done, man. I'll come back tomorrow. Tomorrow. Good job, my friend. Awesome. Yeah. Yeah. Yeah, for 1%. You know what? 1% may be too much. 0.5%. How about that? Half of the percent. Better every day. Hey, thank you so much, guys. I appreciate very much for you guys to stop by and we hang out and we had fun, and I appreciate so much. And I'll see you guys tomorrow. Yep. Again, thank you so much. We'll see you tomorrow.